If you're shopping around for a mortgage, you've probably heard of the term points, but you don't know what they are. So what are mortgage points? Discount points, you see a lot of different terms. Basically, it's a way to lower your interest rate by paying a little bit of money up front. And in return, you get a lower interest rate, which means you get a lower monthly payment. So how much do points cost? Typically, 1 point is equal to 1% of your total loan amount. So for example, on a $400,000 loan, 1 point would set you back about $4,000. So why would you buy points? That is the million-dollar question. The reason you would do it is because you want to lower your monthly payment for the life of the loan. But guess what? Buying points doesn't always make sense. You need to actually factor something in called the break-even point. Now, this is the time it takes for the monthly savings from buying points to equal the upfront costs. It could be several years, so you need to plan on staying in your home for a while to actually reap the benefits. The easiest way to think about it when comparing options, or just to frame this choice in terms of time to return on investment, is you take the cost of the points and you divide that by the monthly savings that you would get with a lower interest rate. Now, whatever that number ends up being is the amount of months that it would take to break even. So then you would divide that by 12 and you'll get an idea of how many years it would take to recoup your investment. So who should and who should not buy points? Now, there's many facets to this, and you don't always want to buy points and get the lower interest rate, right? Just like everything else in life, it doesn't make sense to buy something today for what you can get cheaper tomorrow. Now, if you're one of those people that thinks that the market's going to actually decrease over the next 6 to 12 months, and I know there's a lot of people out there that think that, it does not make sense to invest in a 5.5% for $2,000 today when maybe 7-8 months from now, you could just refinance to that rate for free. Right, that's the example of points and break even. And this is why you need to talk to somebody licensed who's also an expert. Listen, if I were to advise a first-time home buyer, I would say be careful on what you read. Everybody wants the lowest interest rate, right? But sometimes the lowest interest rate actually does not make sense. And that's because of the cost associated with that rate. A lot of lenders will quote you something that sounds really, really good, AKA a really low interest rate, but then glass over the actual cost to buy that interest rate, AKA points. And what makes sense for you is not necessarily going to make sense for somebody else. So sometimes that investment in points is worth it, sometimes it's not. That's one piece. The second piece is it's really important to compare interest rates and the cost of each interest rate when comparing lenders in general, not just what option to go with, but who you want to use for your financing. All right, so which points are right for you? Well, let's start with which points are not right for you, which I can answer 100% of the time without a doubt. Origination points are never right for you. These are always bad. Why are they always bad, you ask? These do nothing for you. All they do is pad the lender's pockets. Here at Tomo, by the way, we charge zero lender fees. We call them junk fees, actually, because what they're doing is they're basically charging you an extra fee. And they're saying it's for the processing, for the underwriting, for the origination. There's different ways that they dress this, but these are always bad because they do nothing for you and they only do something for the lender or the bank in which you're getting a mortgage from. Let's talk about mortgage discount points. So these can be good for you. Not always. They can be good for you. You benefit from this. The lender doesn't necessarily benefit from this. And these are usually tax deductible. Read the small print, talk to your CPA, usually tax deductible, whereas these are not tax deductible, okay? So remember that. Now, what are some situations in which you would want to or would not want to actually invest in mortgage discount points? Well, if you think you're going to move in the next 12 months, it probably doesn't make sense to invest a couple $1,000s with a break-even point of 3 or 4 years to get a lower interest rate, get a lower monthly payment if you're going to move, and you're not going to be in there long enough to reap the benefits of that. This is why it's so important that you work with experts in their craft. Here at Tomo, purchase is all we do. We do nothing else. This is why we're absolutely amazing at it. And it's really important that you're honest with your loan advisor and tell them what your plans are, what your goals are, and kind of give them that information so that they can take that information and actually put together the best financial solution using the terms of a mortgage to accomplish that. So listen, I just went over a lot of information. If you still have questions, that's completely okay. Please reach out to us. We're here to help. Free consultation services, of course, or go to the Tomo blog to get more information.